Hi there, I'm Gareth John, and we're now going to see, are you ready for bookkeeping transactions under AQ 2016? So hopefully you've already taken the time to work through the 10 sample tasks I gave here. Now bear in mind, this test isn't in the same format and it's not as comprehensive as the real assessment will be for this unit. So do make sure you are practicing full mocks and having a go at the sample assessments on the AAT's website. I'm hoping that this little test will give you a real flavour for some of the technical knowledge that you do require to pass the bookkeeping transactions assessment. So let's go through in turn. So starting with task 1. So the 30th of June, and a business has just received a cheque from a credit customer called A Limited for £1,900, which they think is a full settlement of their outstanding account balance. We're then given the account for A Limited in the sales ledger of the business. Now the sales ledger is the subsidiary ledger or the memorandum ledger, where we record the individual balances owed by each credit customer. And A Limited is one of our credit customers, so this is their individual balance set up with some entries on the debit side of the ledger account. Now one thing to bear in mind is that in the sales ledger, entries on the debit side increase the amount owed by the credit customer, increase the asset that we're owed, the receivable. And we've also got some entries on the credit side of A Limited's sales ledger account. And on the credit side, entries will be reducing the amount that the customer owes. Now a good starting point in this task is to actually work out what the outstanding balance is by effectively balancing off the debit side against the credit side. So the way we balance off our accounts is look at the two sides and work out which has got the greatest total, which I think here is the debit side, where I think there's a total of £10,300. There's only £4,900 on the credit side, so the debit side has the greatest total, and we put that total on both sides of the ledger account and then identify what the balancing figure would need to be. So I think that because the credit side is smaller, we therefore need a balancing figure on that side. I think the easiest way to work out that balancing figure is take the total that we want it to balance to and just deduct, in this case, the 3 items already on the credit side. I get the balancing figure required, therefore, at £5,400. Now that would be the carried down balance at the end of the month. That's what the sales ledger account is saying that A Limited owe to us, £5,400. They've only paid us a cheque for £1,900. That's not enough. So the first part of the question, is the cheque for £1,900 an overpayment or an underpayment? Well, I think it's an underpayment. They should have paid us £5,400. Well, there's clearly some kind of problem, clearly some kind of discrepancy here. And the best way to identify the discrepancy is to look at the difference between what they should have paid us, which is the £5,400 that their sales ledger account would have suggested. Take the difference between that figure and what they did pay us. Now I get the difference coming to £3,500. That's the amount they've underpaid us. And easiest job then is look and see if you can find that figure somewhere. And in fact, I spot £3,500 on the debit side relating to a sales invoice we've sent out to this customer, which clearly they haven't paid for. Perhaps they didn't receive the sales invoice, or perhaps they did receive it and don't agree with it for some reason. But I think that discrepancy relates to sales invoice 273. That appears to be the amount that they are not paying us for that I think they should have done. Okay, so that's task 1. What about task 2 then? So business has received 2 credit notes from suppliers. One from B Limited for £100 net, so that £100 value excludes VAT, and one from C Limited for £240 gross, so that £240 includes VAT. So make sure you're comfortable with the difference between net and gross. Net excludes VAT, gross includes the VAT. We're then asked what entry needs to be made in the purchase ledger account of B Limited. Because just like the sales ledger lists the individual amounts owed by credit customers, the purchase ledger lists the individual amounts we owe to credit suppliers. And B Limited, they're one of our credit suppliers, so they will have a purchase ledger account. So actually, in terms of the account name, well, because the purchase ledger contains individual accounts for each supplier, the account name will actually be to B Limited's account. The amount that I will post to that account, well, the figures recorded in the purchase ledger are actually always gross. Because in terms of what you owe a supplier, you can imagine if a supplier sends you an invoice, you owe them the full gross value of the invoice, including VAT. Now bear in mind, the £100 that the credit note was for was actually a net figure. So in fact, I think I need to work out the gross figure by adding 20% VAT, is what we would generally assume as the standard rate. So actually adding on 20% VAT by multiplying by 1.2, I think that the gross value of this credit note will be £120. That's the total amount it will affect B Limited's purchase ledger account by. And will that be a debit or a credit? Well, this is where you've got to be very careful as to whether you're dealing with a purchase invoice from a supplier or a credit note from a supplier. Now remember, the purchase ledger is looking at the liability we owe to our suppliers. Liabilities are credit balances. So to increase the liability that we owe a supplier would be a credit entry. Now that's what we'd do if we'd received a purchase invoice from a supplier, because a purchase invoice implies I owe them more. But remember, these are credit notes from suppliers. Credit notes are reducing what you owe them. A credit note is perhaps if I've made returns to a supplier, in which case I don't owe them the money. So actually the credit notes will reduce the liability. And if a liability is a credit entry, to reduce the liability, I think will require a debit entry to B Limited's purchase ledger account by the 120, the gross value of the credit note. Now if that's looking at the entry in the purchase ledger account of one of the suppliers, we're then asked to enter both purchase credit notes into the purchases returns daybook. So this is one of our books of prime entry. You can see they've already included some of the information required. We just need to complete the values with the total value, which would be the gross full value of the credit notes, then the VAT element and the net element. Well, actually, we've just been playing around with that credit note from B Limited. The net value of the credit note was the £100. We then worked out the gross value, the full total, by adding on 20% to give 120. And the VAT, you can either take as being the difference between the gross and the net value, or if you take the net value and multiply by 0.2, just to multiply by 20%, that should give you the £20 as well. Now when we come to looking at the credit note from C Limited, that was £240, but that was the full gross value. So that's the full total of the credit note. That's the amount we'd have to debit from C Limited's account in the purchase ledger. We then need to identify what the net value of that is. Well, to go from net to gross, we saw we multiply by 1.2 to add 20%. to go the other way, to go from gross to net, just do the opposite. You divide by 1.2 to strip out the 20% VAT, and 240 divided by 1.2 gives me a net value of that credit note of £200. And you can then double check if you multiply that net value by 20% or by 0.2, that should give you £40 VAT, which is the difference between the 240 gross value and the 200 net value. So that exercise is really just a matter of making sure you can identify the VAT element, either going from net to gross or going from gross to net. Well, task number 3 then, so delimited purchases goods from another VAT registered supplier with a list price of £275, which excludes VAT, so that's the net list price, but maybe we don't pay the list price, a trade discount of 10% is given, with a further 2% discount if the invoice is paid within 14 days. And delimited has a policy of not taking up any prompt payment discounts if offered, and we're told that the VAT rate is 20%. How much will delimited pay the supplier? Well, they're going to pay the gross value of the invoice after, in this case, the trade discount, because that is given automatically. But if they don't take up the prompt payment discount, we don't need to worry about the 2% discount. So let's start. The list price was £275. If though they get a 10% trade discount on that list price, means they'll only be invoiced for 90% of the net value, which I'm getting as £247.50. That's the discounted net value after the trade discount, but they will then pay VAT on that. And at £247.50, just remember that you'll pay VAT on the discounted value after the trade discount, but not after the settlement discount, because at the point of invoice we don't know whether they're going to take that up. That gives me £49.50 of VAT, giving the full gross value as £297, and that's the amount that delimited will pay the supplier, assuming that they don't take up the 2% prompt payment discount. Well, task 4, a business has made a cash payment to E Limited of £360 for some cash purchases, and that figure included VAT, and a cheque payment for £350 to F Limited. Enter these transactions onto the credit side of the cash book. So the credit side of the cash book is going to be cash coming out of the bank account, which would make sense if we're making payments. Well, if we start with the first of the two transactions, the cash payment being made to E Limited, and if that's being made in the form of cash, that will therefore be a credit to the cash column. And that's for cash purchases, but including VAT. And we've got to make sure that we only record the net value of the cash purchase. So we saw a couple of tasks ago how to convert gross to net, divide by 1.2. So I think the net value of that transaction, the amount we'd actually record as the purchase figure, is £300. And then you can either multiply that by 20% or 0.2 to give the VAT, or just look at the difference between the 360 and the 300. So I get a £60 VAT element, which would actually be input VAT to be reclaimed by the business. We've then got the second transaction, cheque payment to F Limited. Now if it's a cheque payment, that means that the £350 is coming out of the bank balance rather than out of the cash balance. And given we're not given any information about any kind of split of VAT, I think I can assume that F Limited would therefore sit on the purchases ledger. That's presumably a credit supplier that we already made a purchase from, that we owe money to. So I'll therefore be paying the the £350 to a credit supplier. So it would be treated as a purchase ledger transaction. It would be reducing what we owe that supplier. Well, that's me dealt with the transactions, so just adding up each of the columns is the other job we were asked to do, which is in some respects the easy bit. So just make sure in the bank column we had a brought down balance of 1,000, and the fact that there was a brought down balance of 1,000 on the bank column, now remember this is the credit side, that means actually the bank was overdrawn at the beginning of the period. So actually we've paid out another £350 cheque, so in fact we'd be potentially even further overdrawn by the end of the period. What about task 5 then? So looking at petty cash, we've got an impressed level of £150, meaning that whenever we top the petty cash tin back up, that's the amount we'll take it back to. At the start of July, the petty cash box was replenished to that level. So they replenished it back to £150. During July, they paid for 2 amounts out of petty cash. £45 net for repairs to a salesman's car, and £36 gross for some stationery, some envelopes perhaps. When the petty cash box is replenished at the start of August, effectively to replace the amounts that have been spent, how much will need to be withdrawn from the bank to put back into petty cash? Well, effectively, we'd have £150 that we had at the start of July when they replenished the level. Knock off the 2 amounts spent. One thing to watch for though is the £45 is a net figure. So actually we would have paid a gross value. So to go from net to gross, we add 20% multiplied by 1.2, which I get as £54 gross value for the repairs that we would have to have paid. We will have to pay the full figure including VAT, is basically £9 of VAT in there. And also knock off the amount paid for stationery, which was gross actually, so that 36 does include VAT, so we don't need to increase that. That means that by the end of July, we would only have £60 left in petty cash. So when we need to then top it back up to the 150 impressed level, I think we would need £90 to be withdrawn from the bank, take us back up to the £150. Or the other way to think about that is we'll need to top it up by the amounts that we spent, by the 2 figures we spent, and if you add up 54 and 36, that's the same £90. So just be careful that you don't answer this question with the 60. Remember, that's how much would be left in the petty cash tin. We therefore need to withdraw 90 from the bank to top it back up to 150. Well, on to task number 6. A customer called G Limited has bought 10 units of a product that has a net list price of £50. The customer, however, receives a 10% trade discount, so they're not going to pay that full £50 net list price. Another customer called H Limited has purchased goods worth a gross value of £720. VAT rate is 20%. First job is to work out how these 2 sales invoices are going to be shown in the Book of Prime Entry in the sales day book. Now you can see we've already got some of the information included. Our job is to complete the columns for the values, the total, which will be the gross value, the VAT element and the net figure. Well, if we start with customer G, now although the net list price would be the £50, if they get a 10% trade discount, they're only going to pay 90% of that £50 price, which gives £45 net price that they will pay, and that's for each of 10 units that they're buying. So I think that the total net value of that invoice is going to be £450, but that's the net value. To work out the gross value, if we multiply by a 1.2 to add 20%, which gives £540 as the full gross value, and then the VAT is either the difference between those 2 figures, which I get as £90 of VAT, or you can take the 450 and just multiply by 0.2, just multiply by 20%. We then get H Limited's. Now, the gross value of that was £720. To work out the net value, we divide by 1.2, which gives me £600 excluding VAT. And again, the VAT's either the difference between those two figures or take the net value times 20%. Either way, you should find it gives £120. We're then asked what the entries in the subsidiary ledger are. Now, the subsidiary ledger, or sometimes described as the memorandum ledger, is the sales ledger. Remember the list of individual customer balances, what each credit customer owes us. Now, since it's the individual balances in the subsidiary ledger, the account name will literally be the names of the individual customers. They will each have their own account in the sales ledger. The amount we alter the sales ledger by, well, the amount owed by the customer is the full gross value of the invoice. If we invoice a customer, they owe us the entire gross value of the invoice, so the 540 and the 720 respectively. And would the entries in the subsidiary sales ledger be a debit or a credit? Well, these are sales invoices sent to credit customers. That increases the amount they owe us, and that increases therefore an asset of the business, and assets are shown with debits. So I think in both cases we're going to debit the sales ledger account of the individual customer with the full gross value of the invoice that they now owe us. Now that's the subsidiary ledger. We're then asked what the entries in the main ledger will be, or sometimes described as the nominal ledger. Now this is actually where we're going to be posting our double entry. And actually, to help you construct your double entry, what we would do is we would actually total each of the 3 columns that we've been working with. So if you total the gross column, you should get 1,260 for the full gross value that we're now owed by both customers together. Add up the VAT, 90 plus 120 is 210, and then add up the net figures. I get that coming to 1,050, and it's these total figures that we now use for posting the double entry, because in total the two customers combined owe us £1,260. That's therefore the full debit that we would post to the sales ledger control account. And remember, it's the control account that we hold in the nominal or the main ledger to record the full amount owed by our credit customers. So that figure obviously is not broken down in the same way that the entries in the subsidiary sales ledger work, as they're posted to individual customer accounts. So we've got the full gross total debited to the sales ledger control account, showing the increase in the asset of the receivables owed to the business. And then the credit side is basically going to split between the VAT of 210, and that's posted as a credit to the VAT control account, because the VAT on your sales is your output VAT. That's money we actually owe over to the taxman. You can imagine that's not the business's money, they owe that to the taxman. Hence the credit is showing the liability owed to the VAT man. And then the final figure from our totals, the 1,050, which is the net total. Now that's the other credit, which will actually get posted to the sales account. That's actually recognising the income, bearing in mind that the business can only record the net figure as their income. They only get to keep the net income. The VAT obviously is paid over to the taxman. And actually you can now double check that if you add up the two credit entries, they should balance against the single entry to the debit side. That's double entry, it should balance, shouldn't it? Well, task 7 also getting us to think a bit about double entry, but particularly looking at, in this case, the credit side of the cash book. So the credit side of the cash book is amounts coming out of your cash because you're making payments, for instance. And actually you can see they've set it up. And what they've got here is a full analysis in the cash book. There are 2 columns showing the amounts actually coming out of firstly the cash of the business, and then secondly out of the bank account of the business. The analysis columns are effectively then just showing how that all breaks down in terms of what the payments relate to, whether it's payments for cash purchases or payments for office expenses or whatever. Now we're going to be coming up with some double entry here. We're told though that the cash book is not part of the double entry bookkeeping system. Now what that means is that we're going to have to post the entries to both cash and bank, as well as the entries from the analysis columns. Now in terms of the double entry we would therefore post, well, we need to therefore post the credits to both cash, which is 2,400, and bank, which is 9,600. The analysis columns then show all the debits that should balance against that. So we'll have a debit to VAT of 400. We'll have a debit to trade payables of 9,600. We'll have a debit to cash purchases for 1,500, and then a debit to office expenses. You see the way that the cash purchases and the office expenses, both debits because they are expenses. And what you can then double check is that the debits we've posted from the analysis columns, if you add those four figures up, which gives me a combined total on the debit side of £12,000, you can double check that that balances against the two credits that we've posted, which also equal £12,000. Now in this example, because we were specifically told the cash book was not part of the double entry bookkeeping system, that's why we had to actually post the two credits into our nominal ledger. If it had said that the cash book was part of the double entry bookkeeping system, it would actually imply that the credits to cash and bank had actually already been posted by virtue of being in the book of prime entry. So in fact, if that was the case, the only difference with my answer is I wouldn't need to post the credits myself. They would already have assumed to have been posted. I would therefore just need to post the 4 debit entries. So I'd only have 4 entries rather than the 6 that we required in this answer, because we did need to post the credits because the cash book wasn't part of the double entry bookkeeping system. Well, what about task 8? Just a process actually of balancing off a T account, balancing off a ledger account to work out the balance brought down at the beginning of the following month. And the usual approach, which is to look at the two sides of the T account. You can see we've got a couple of entries on the debit side, just a single entry on the credit side. So think about which side is bigger. Well, I think the debit side is bigger, with a total of 75,766. So we put the higher of the two sides on both sides as the total. We then identify what the balancing figure will need to be, in this case on the credit side. So take the 75,766, deduct the 28,546 you've already got there. Gives me a balancing figure of £47,220. Now that would be at the end of August. So it would be the 30th of August, and that actually would be the balance carried down. But if you bear in mind, the balancing figure in this case is on the credit side because the debits were bigger. So actually it'll be carried down onto the other side. So at the 1st of September, the balance brought down at the beginning of the following month would be our 47,220 on the debit side, because initially the debits were bigger than the credits, weren't they? Well, nearly there. So task number 9, basically likely to get you to lay out a trial balance. For the purposes of this, we're just making sure we know which side of the trial balance each of these ledger accounts would fall on. Would it be on the debit side or would it be on the credit side? And this is where I always use my little mnemonic of dead click to remember which side of the trial balance they will sit. So the dead is that debits can represent expenses, assets, or drawings, whereas the credit side can represent liabilities, income, or capital. So actually, if we just go down the different ledger account balances, thinking about which side they sit on. So starting with A, sales. Well, what is sales? Well, sales is income. So I think your sales figure will want to sit on the credit side of the trial balance. Purchases. Well, purchases are an expense of the business. Expenses are on the debit side. Got to be a little bit careful with the next two because we've got motor vehicles and motor expenses. Now, motor vehicles would indicate the actual vehicles you own. So the cars and vans the business owns, and things that you own are an asset of the business. So the motor vehicles would be a debit for the assets we own. We've then got motor expenses, which might be things like paying for petrol to run your cars. Now, expenses, well, they're also on the debit side, but are rather different to the assets of the vehicles you own. The expenses would be something that hit the profit and loss account and reduced your profit for the period. Now, we've then got returns. Now, returns do quite often fool students. The thing about returns is that they're essentially the opposite of the thing they relate to. So sales returns is the opposite of a sale. If you make a sale to a customer, that's income you're generating. If they then don't like what you've sold them and they send it back as a return, then that's going to reduce your income. So if the sales was a credit, sales returns will be the opposite. They'll be a debit. They'll actually reduce your income. And similarly, purchase returns, this is where I've made a purchase but I send it back to the supplier. And if purchases are a debit, purchase returns as the opposite will have to be a credit, won't they? So just think of returns as being the opposite of the thing that they relate to. And we've then got discounts. And a bit like with the returns, you've got two types of discounts going in each direction. You've got discounts allowed and discounts received. Now, discounts allowed is if I'm allowing my customers to have a discount. Now, if I give my customers a discount, that's an expense. That's going to reduce the profit of the business. So discounts allowed will be a debit entry, basically an expense of the business. Whereas discounts received is if I receive a discount from one of my suppliers. That's actually going to reduce the expense of the purchase because they've let me off with a full value. That's actually going to improve my profit. So discounts received is actually a bit like income to the business because it's going to reduce your purchase expense. So discounts received would be a credit. And then finally, last task number 10. So if the total value of assets of a business is £65,000 and the total value of capital is £20,000, what's the total value of liabilities? Now, this is basically using what's known as the accounting equation. Actually, the accounting equation is just a way of showing the way the balance sheet works in a formula. And the way the balance sheet works is that if you take the assets that the business owns and deduct the liabilities that the business owes, that should equal the capital, which is at the bottom half of the balance sheet. So A minus L equals C, assets less liabilities equals capital. Now we know here that the assets is £65,000. The liabilities is what we're looking for, but we're told that the capital equals £20,000. So what would I knock off £65,000 to be left with just £20,000? Well, I think the value of the liabilities here must be £45,000 in total. Well, I hope you found that useful. I hope you've been able to identify a few areas that you perhaps need to work on before you sit the assessment for bookkeeping transactions. Like I said, though, do make sure you're practicing a full mock or two. Have a look at the AAT sample assessments on the website. But good luck with it. I really hope you do well.